Welcome to Griffonomics.
We are so glad you're joining us.
Yeah, we really are. Because today, what if I told you that the cure for type 1 diabetes isn't, some new miracle drug, but actually an industrial manufacturing problem?
Right. It completely flips the script.
It really does. So for this deep dive, we are generating a granular investigative analysis of Lineage Cell therapeutics. We're exploring this fundamental transformation happening right now in the biotech sector.
A massive pivot.
Exactly. We're looking at how Lineage is evolving from a promising early-stage clinical biotech into what frankly looks to be a commercial-scale manufacturing powerhouse.
And we have a pretty massive stack of source materials to unpack for you today to prove that.
Oh, yeah. Lots of reading.
Right. Our forensic analysis is built on Lineage's 2025 and 2026 letter to stockholders. Their deeply technical Q4 2025 earnings call transcripts.
Very technical.
Very. Plus their comprehensive 10K annual report and a nice cross-section of strategic analyst reports covering their pipeline.
Okay, let's unpack this. Because Lineage is operating in a space that requires a massive mental pivot.
Yeah, they are.
I mean, cell therapy has revolutionized oncology, but they are explicitly targeting non-oncology indications.
Right, they're going after entirely different targets.
Specifically, neurology, ophthalmology, and metabolic diseases.
And the terminology they use in their corporate literature, it's incredibly deliberate. They prefer the phrase cell transplant over cell therapy.
Ah, transplant. That's a huge distinction.
It is. And to grasp their business model, you have to really understand the biological starting point. They use pluripotent cells.
Right, pluripotent.
Which basically means these are nature's blank slate, cells that have the potential to become almost any specific tissue in the human body.
But they aren't just, injecting these blank slates into a patient and crossing their fingers.
No, not at all. That would be chaotic.
Yep.
Through proprietary directed differentiation protocols, they essentially act as cellular architects.
Wow, cellular architects.
Yeah, they guide these pluripotent cells to become millions of mature, fully differentiated, off-the-shelf replacement cells.
Right, so they are building the specific, fully formed cell that a patient has actually lost to disease or physical trauma.
Exactly.
I always look at this through a mechanical lens, like car repair.
Okay, lay it on me.
So if your car engine is violently misfiring because you have a faulty spark plug, you don't just pour in a bunch of chemical oil additives and hope the broken engine somehow runs better.
Right, that won't fix the spark plug.
Exactly. You open up the engine block, you physically extract the bad spark plug, and you install a brand new factory-grade spark plug.
I like that analogy.
Thanks, but here is where the analogy needs to go deeper for biology. Because it isn't just about dropping the part in. That new spark plug actually has to seamlessly wire itself into the car's electrical grid.
Right, they have to function.
It has to start firing in rhythm with the rest of the engine. And that is Lineage's replace and restore paradigm.
It's a profound structural integration, honestly. And you see this precise approach across their three main pipeline pillars.
Walk us through those.
Sure. So first there is Oprogen, which manufactures retinal pigment epithelial cells, or RPE cells, to replace the dying cells in the eyes of patients with dry, age-related macular degeneration.
Okay, so ophthalmology.
Right. Second, you have OPC1. That's manufacturing oligodendrocytes for the spinal cord to physically restore the nerve insulation that gets stripped away in severe spinal cord injuries.
Neurology. Got it.
And third, their newest initiative, ILT1, which is manufacturing functional islet cells to potentially cure type 1 diabetes.
Which is the metabolic side. But look, having the blueprint for a perfect factory-grade biological spark plug means absolutely nothing if your factory can only build, one of them every 12 months.
Oh, totally. The graveyard of biotechnology is full of incredible science that simply could not be produced at scale.
Exactly. And that brings us to what the analyst reports are calling Lineage's absolute biggest differentiator, which is their manufacturing mode.
Right, because manufacturing is the ultimate, undeniable bottleneck for allogeneic, meaning off-the-shelf cell therapies.
It's just so hard to scale.
It is notoriously difficult. Producing living, breathing cells at a commercial scale while maintaining pristine genetic purity and consistency across batches. It's a nightmare.
So how does Lineage actually solve that?
Their answer to this is their AlloScope platform. It basically operates on a highly controlled, two-tiered cell banking system.
Okay, 2 tiers.
Yeah. They begin with a genetically stable master cell bank That master bank generates a working cell bank, and then that working bank is what produces the final commercial doses.
Okay, I see.
And the crucial update buried in their 2025 reports is that they have successfully completed cGMP current good manufacturing practice production runs.
Wow, so they've actually validated the scale.
They have. They proved they can scale from a single controlled line to potentially millions of functional doses.
I have to push back on a specific claim here, though, because while reading through the Q4 earnings transcript, the CEO used a very specific term for their islet cell initiative, the type 1 diabetes program.
You guess, 5D engineering.
Yes, he called it 5D engineering. And I have to be honest, in a sector that is absolutely flooded with hyperinflated marketing jargon, 5D sounds like they are claiming to bend the laws of physics.
It really does sound like sci-fi.
Is there actual mechanistic substance behind that phrase, or is it just corporate spin?
I had the exact same skeptical reaction when I first saw the phrase. But when you break down the biological mechanics, it describes a legitimate, massive technical breakthrough.
Really? Okay, explain the 5D part.
Well, in cell manufacturing, you face a fundamental law of physics and biology. If you grow cells on a flat, two-dimensional surface like the bottom of a petri dish, you maintain incredible control.
Yes, they're anchored.
Right, they like being anchored. It keeps their genetic stability intact. But 2D surfaces don't scale. You simply run out of physical space.
You can't just build a petri dish the size of a football field.
Exactly. Conversely, if you throw those cells into a three-dimensional liquid suspension, like a massive thousands of liters bioreactor vat, you get incredible volume, but you lose the anchor.
Ah, so they float around.
Yeah, the cells float freely, they get stressed out, and then they mutate or die. So Lineage basically solved this inherent conflict.
So how are they physically merging a 2D surface with a 3D volume?
They utilize microscopic, suspended structures within the bioreactor itself. So 2 dimensions of flat physical control, multiplied by 3 dimensions of liquid bioreactor volume, gives you their 5D engineering moniker.
Oh, I see. 2 plus 3 is 5.
Yeah, they are essentially tricking the cells. The cells chemically and physically feel like they are safely attached to a stable 2D surface, which keeps them genetically pure.
But they're actually floating in a 3D vat.
Right, multiplying by the billions inside a massive 3D vessel.
That is clever. And what stands out in the 10K is that they successfully proved this mechanism at a 0.5-liter scale.
Which is huge.
Right, which might sound small to a layman, but in bioreactor physics, conquering that first half-liter is the critical leap.
It's the hardest part.
And this perfectly illustrates what analysts call Lineage's inverted risk framework. Because, usually a biotech burns hundreds of millions of dollars running clinical trials for years just to see if a therapy works.
Oh, all the time.
And then, if they get lucky and the FDA actually approves it, they suddenly realize they have no idea how to manufacture enough of it to supply the market. But Lineage flipped the script for the ILT1 diabetes program.
Because we already know for a fact that islet cell transplants can cure type 1 diabetes. We have decades of data from cadaver transplants proving the clinical science works.
The mechanism isn't the mystery.
Right. The primary risk has never been the clinical mechanism. The barrier is strictly manufacturing scale, because a single diabetic patient might require 1 billion healthy cells.
1 billion cells per patient. Wow.
Exactly. So Lineage tackled the absolute hardest bottleneck first, bioreactor feeding scale. By proving the viability at that 0.5-liter scale, they massively de-risked the long-term commercial viability of the program.
Before they even dosed a single patient in a clinical trial.
Exactly.
Okay, so they have cracked the code on manufacturing scale. But how do these living cells practically get into the patient's body? Because living cells are incredibly fragile.
They are very sensitive.
You can't just drop them in a cardboard box and ship them to a hospital via standard mail.
No, you can't. The logistical friction of cell therapy is usually a nightmare for hospitals. And this brings us to Lineage's thaw and inject formulation.
Okay, what does that mean?
Well, historically, to keep cells alive during freezing, companies use cryopreservatives like DMSO. The problem is, while DMSO protects the cell at -80 degrees, it is highly toxic to the cells at room temperature.
So the moment it warms up, it starts killing the very cells it was protecting.
Yes. So a surgical center would receive a frozen vial and have to send it down to a specialized, sterile, clean room lab in the hospital basement.
Sounds expensive.
It is. Technicians would have to perform a complex, multi-hour washing process to strip away the preservatives right before the surgeon needed it.
Which introduces massive margins for human error. If the tech washes it slightly wrong, The cells die before they even reach the operating room.
And your clinical trial data gets ruined by a logistical error, not a scientific failure.
Right. So what did Lineage do?
They engineered a proprietary formulation that is entirely non-toxic upon thawing.
Wait, entirely non-toxic?
Yeah, the cells are shipped frozen directly to the surgical suite. The surgeon literally thaws the vial in their hand and injects it immediately.
No washing?
No washing, no specialized basement labs, no logistical friction.
That is a massive operational moat, but the innovation doesn't stop at the vial. We really have to look at the surgical delivery.
Let's pivot to the OPC1 spinal cord program.
Yeah, because administering a liquid volume of cells into a severely damaged spinal cord is unimaginably delicate.
It really is.
Lineage partnered with a specialized company called Nergain Technologies for a novel delivery device being used in their Phase 1 Doses D study. We need to explain why this specific device is so vital.
Right, so we need to understand the anatomy here. The cells must be injected directly into the parenchyma, which is the highly delicate functional nerve tissue of the spinal cord itself.
And these patients are in bad shape.
Yes, patients with severe chronic spinal cord injuries are frequently paralyzed to the point where they are dependent on mechanical ventilators just to breathe.
Wow.
Historically, delivering a cell therapy into the spine required the surgical team to literally turn off the patient's ventilator.
Wait, they stopped the breathing?
Yes, they had to stop the mechanical breathing because the natural rise and fall of the patient's lungs would cause the surgeon's needle to shift.
Oh, geez.
Yeah, potentially shredding the very spinal cord they were trying to heal.
And stopping the breathing of a paralyzed, deeply anesthetized patient is obviously a terrifying high-risk scenario for any anesthesiologist.
It's awful.
Yeah.
But the Nergain device changes the paradigm. It is engineered to safely mount and move in tandem with the patient's natural respiratory movements.
So it rides the wave of the breath.
Exactly. It allows the neurosurgeon to accurately and safely inject the OPC1 cells into the parenchyma without ever stopping the ventilator.
That transforms an acutely dangerous procedure into a controlled, standardized delivery.
It really does.
Here's where it gets really interesting, though. Let's assume you have perfect manufacturing, seamless logistics, and flawless surgical delivery. You still have the ultimate biological enemy to deal with, the human immune system.
Ah, yes. Rejection.
If I transplant 1 billion foreign cells into your body, your immune system is going to aggressively hunt them down and destroy them.
Which is why transplant patients historically have to take powerful, broad-spectrum immunosuppressant drugs for the rest of their natural lives.
Just to keep their own body from destroying the cure.
Right. And those drugs suppress the entire immune system, leaving the patient highly vulnerable to severe infections and cancers.
It's a terrible trade-off.
It is. This is the holy grail question for the entire sector. How do you make an off-the-shelf foreign cell therapy practically universal without destroying the patient's immune system?
And Lineage's answer is an initiative called R&D1, which they're developing alongside their partner, Factor Bioscience.
Right.
In January 2026, Lineage took delivery of a novel, hypoimmune-induced pluripotent stem cell line. They essentially utilized gene editing to build a biological cloaking device.
A cloaking device. I love that.
It's true. Here's the mechanism. Every cell in your body has a protein marker, like an ID badge called B2M.
Okay.
If a foreign cell enters your body with the wrong B2M badge, your CD8-positive T cells attack it. So Lineage simply deleted the B2M gene.
They just stripped the ID badge off the cell.
Yep. But, human biology has built-in redundancies. If a cell is missing the B2M badge entirely, another type of biological enforcer called a natural killer, or NK cell, will just assume it's a threat and destroy it anyway.
So simply hiding isn't enough.
Yeah.
You actually have to actively deceive the natural killer cells.
Exactly.
And Lineage solved this by inserting a different gene called HLA-E. This gene forces the cell to overexpress a very specific chemical signal.
It's basically handing the cell a fake VIP pass.
Yes, a fake VIP pass that tells the patrolling NK cells, hey, I am healthy, I belong here, do not attack.
That is an incredibly elegant genetic evasion strategy.
If this hypoimmune technology translates successfully from the lab into human clinical trials, it could completely eliminate the need for lifetime immunosuppressants.
Which unlocks the true, unhindered potential of allogeneic medicine.
Absolutely.
Now, the science is undeniably fascinating on a mechanistic level, but as anyone listening who follows the brutal reality of the biotech markets knows, incredible science dies in the lab every single day.
Every single day.
The ultimate undeniable proof of concept is whether massive conservative pharmaceutical conglomerates are willing to put their own capital on the line. We have to look at the strategic partner forensics.
And in terms of validation, it does not get much more rigorous than Roche and Genentech.
Those are heavy hitters.
They are Lineage's flagship partners, specifically driving the OpRegen program in the eye. Under the terms of this worldwide collaboration, Lineage secured a $50 million upfront cash payment.
$50 million. Nice.
Right, and they recently triggered their first $5 million development milestone. And they are contractually eligible for up to $615 million in future clinical and commercial milestones.
Plus tiered double-digit royalties on eventual sales, right?
Exactly.
And when you look at the clinical data that compelled Genentech to write those checks, it is genuinely staggering.
Let's talk about the durability.
Yes, we are looking at the Phase 2A durability data for OpRegen in patients with geographic atrophy. For context for you listening, geographic atrophy is an advanced form of macular degeneration where the cells in the center of the retina literally die off,
Creating a growing, irreversible black spot in the center of the patient's vision.
It is strictly progressive. It only ever gets worse. But in the optimal cohort of this trial, treated eyes showed a mean improvement of plus 6.2 letters on a standardized vision chart at 36 months.
That is insane.
Let me repeat the gravity of that. 3 full years after a single one-time surgical injection, these patients were reading more than a full line better on an eye chart.
Reversing a disease that is universally defined as progressive.
And holding that reversal for 3 years, it is unprecedented in this field.
And you can track the institutional excitement just by watching how Genentech is behaving operationally. Pharmaceutical giants are notoriously cautious.
Very slow-moving.
Usually, yeah. But Genentech didn't just casually continue the trial. They aggressively expanded the Phase 2A Galette study from 7 clinical sites to 17 sites in a span of just 9 months.
Wow, that's fast.
They actively acquired novel surgical delivery devices specifically tailored for this subretinal procedure, and they marched into the FDA and successfully secured Regenerative Medicine Advanced Therapy, or RMAT, designation.
That aggressive operational scaling is the undeniable body language of a massive pharmaceutical company that internally believes they are developing a multi-billion-dollar blockbuster.
Exactly.
Furthermore, Lineage is proving they aren't just a one-trick pony reliant solely on Roche. They recently executed a collaboration with William Demant Invest, or WDI, surrounding their resonance hearing loss program.
Another solid partnership.
Yeah, WDI is stepping up to fully fund a $12 million research deal to advance that specific pipeline. This is a critical signal for investors because it proves Lineage possesses the managerial acumen to monetize early-stage, non-core assets.
They are successfully utilizing external capital to push their broader pipeline forward without draining their own treasury.
Right. But, you know, those massive $615 million Genentech milestones aren't paid out tomorrow.
No, they are staggered over years of clinical progress.
So how does a biotech company survive the infamous Valley of Death while waiting for those triggers? We need to ruthlessly examine the fiscal year 2025 financial realities to see if Lineage can keep the lights on.
Let's pull apart the revenue mix because the composition is really telling.
Okay.
In 2025, Lineage reported total revenues of $14.6 million. What immediately jumps out from the 10K is that 93.5% of that revenue was derived directly from those high-profile collaborations with Roche and WDI.
Wow. Almost all of it.
It undeniably proves that their partnership model is generating tangible, sustaining revenue today, not just hypothetical promises for a decade from now.
But there's a glaring contradiction in this 10K that I really need you to translate.
Okay, shoot.
The executive team repeatedly touts their strong financial health, yet the very first page of the financials shows they reported a massive FY25 net loss of $63.5 million.
Ah, yes. The net loss.
On its face, burning $63 million to generate $14 million in revenue looks like a catastrophic trajectory.
It looks catastrophic right up until you dig into the arcane mechanics of biotech accounting.
Okay, so enlighten us.
What you are seeing is a classic paper loss paradox. That $63.5 million loss is heavily artificially skewed by 2 major non-cash accounting charges.
Non-cash meaning they didn't actually spend the money.
Exactly. The primary culprit is a $37.9 million non-cash warrant remeasurement.
Okay, let's break that down.
Let me explain the mechanics of a warrant. A warrant is essentially a coupon given to early investors, granting them the right to buy new shares of the company at a fixed, predetermined price, let's say 91 cents, regardless of what the current market price is.
So if the stock is trading at $2, having a coupon to buy it at 91 cents is incredibly valuable to the investor.
Exactly. It is highly valuable to the investor. But strict accounting rules force the company to classify those unexercised coupons as a financial liability on their balance sheet.
Oh, weird.
And they have to recalculate the theoretical value of those coupons every single quarter.
Okay, I see where this is going.
Ironically, because Lineage's underlying stock price performed very well and went up significantly during 2025, the theoretical cost to the company of those outstanding warrants skyrocketed.
Ah.
Therefore, Lineage was legally required to record a massive $37.9 million expense on their income statement, even though not a single actual dollar of cash left their bank account. It is a mathematical phantom.
That is wild to think about. They essentially took a massive hit on the reported income statement precisely because their stock was performing well.
Yes.
Okay, what was the second non-cash charge artificially inflating that net loss?
The second factor was a strategic $14.8 million impairment charge. Lineage made the executive decision to formally abandon an older legacy technology called the VAC platform.
Just cutting their losses on old tech.
Right. By terminating those old agreements and writing off the legacy assets, they took a painful one-time accounting hit.
But operationally?
Operationally, it brilliantly cleared the decks. It freed up precious capital and organizational focus entirely for their high-value cell therapy assets.
So when you strip out those theoretical paper losses, their true financial health snaps into focus.
Completely. Sitting on $55.8 million in liquidity, which was recently bolstered by milestone payments and strategic capital raises, Lineage has successfully extended its actual cash runway deep into the second quarter of 2028.
Which is huge. Possessing a guaranteed runway all the way to mid-2028 in the current macroeconomic biotech climate is an incredible luxury.
There really is.
It means they aren't forced to go to the markets and panic raise money at highly dilutive, distressed valuations just to keep the lights on.
Exactly.
So with big pharma backing, unprecedented clinical durability data, and a fortress balance sheet extending to 2028, it sounds like an absolute sure thing. But nothing in biotechnology is a sure thing. The market still prices in significant skepticism, and to be objective, we have to look closely at the acute risks threatening this portfolio. The bear case is very real.
The most acute, immediate risk to Lineage isn't actually clinical, it is geopolitical.
Geopolitical.
Yes.
Yeah.
All of Lineage's critical cGMP manufacturing, their proprietary cell banking, and their complex process development, the entirety of their alloscope moat operates out of their subsidiary, CellCure Neurosciences.
Okay, and where is that located?
That subsidiary is physically located in Jerusalem, Israel.
Oh, yeah, if you are an investor looking at this, you have to weigh that heavily. It is like spending a decade engineering a bespoke billion-dollar hypercar, but realizing the only factory on Earth capable of building it is permanently bolted down inside a geopolitical minefield.
It's a massive vulnerability. The SEC filings explicitly note that 2/3 of their entire workforce is based in an active conflict zone.
Wow, 2/3.
Furthermore, analyst reports confirm that some of their critical employees have already been activated for mandatory military duty.
That's a huge disruption.
Any physical damage to that specific facility or prolonged regional disruption affecting supply chains wouldn't just be an inconvenience. It could severely bottleneck or entirely halt their clinical pipeline.
And you cannot simply pack up the factory and move it to Ohio.
Not at all. The OpRegen program's early development was heavily subsidized by grants from the Israel Innovation Authority, or IIA.
Oh, so there are strings attached.
Very heavy strings.
Yeah.
Because they accepted those grants, Lineage is legally bound by severe restrictions preventing them from transferring that manufacturing intellectual property outside of Israel without explicit, difficult-to-obtain governmental permission.
So they're locked in.
Furthermore, as repayment for those early grants, Lineage owes the IIA up to 24.1% of all future Roche milestone and royalty payments, capped at a maximum of $96.2 million.
Okay, so the Israeli geography comes with heavy operational chains and significant financial obligations.
Yes.
We also have to soberly address the financial dilution risk. We talked about those warrant coupons earlier.
And 91-cent warrants.
Right. There are currently 35.2 million outstanding warrants priced at 91 cents. If the stock stays healthy, investors will exercise those warrants.
Which brings roughly $30 million of fresh cash directly into Lineage's treasury.
Which is fantastic for extending the runway even further, but it simultaneously creates massive immediate dilution for existing shareholders.
Right. It fundamentally increases the total slice count of the equity pie.
Making every existing investor's individual slice mathematically smaller.
Finally, we must never lose sight of the surgical realities. The manufactured cells themselves might be perfectly safe, genetically pure, and highly effective.
The product is good.
But the administration is inherently invasive. Injecting fluid beneath the delicate retina of a human eye or directly into the parenchyma of a damaged spinal cord carries profound, inherent procedure-related risks.
Even a minor surgical error by a physician in a clinical trial could trigger a severe adverse event.
And an adverse event could force the FDA to slap a clinical hold on the entire program, even if the surgical tool caused the issue and the cell therapy itself was flawless.
Okay, so synthesizing all of these moving parts, the biological breakthroughs of 5D engineering, the massive validation from Roche's aggressive expansion, the extended 2028 financial runway weighed against the heavy geopolitical concentration and the looming dilution risks. What is the final verdict on Lineage?
The overarching strategic outlook for Lineage Cell Therapeutics is broadly rated by institutional analysts as high-H alpha, high-H risk.
High alpha, high risk. Makes sense.
Ultimately, their near-term market valuation remains inextricably tethered to Roche's specific clinical timeline and the upcoming data readouts for OpRegen.
However,
That inherently high-risk clinical profile is heavily supported and arguably mitigated by an industry-leading manufacturing moat in the Alloscope platform.
so what does this all mean for you? I want to leave you with a final provocative thought to mull over as we conclude this analysis.
Always good to zoom out.
Yeah. If Lineage successfully scales their 5D engineering, particularly that massive 3D bioreactor scale-up for the diabetes program, could their underlying alloscope platform eventually become vastly more valuable than the actual therapeutic programs they are developing?
Oh, that's an interesting angle.
Think about Amazon's history. Amazon originally built Amazon Web Services, AWS, purely as an internal tool to keep their own retail store from crashing.
Right, it was just infrastructure.
But they quickly realized that the infrastructure itself was a world-changing business. Could Lineage ultimately become the AWS of allogeneic cell manufacturing?
Wow.
Could they pivot to renting out their proprietary 5D scale and precision control to the entire biotech sector, solving the manufacturing bottleneck for everyone else?
It is a fascinating strategic pivot to watch for in the years ahead.
Risk defined, portfolio protected.